G'day and welcome to another episode of SidekickTV. Today I'm joined by the familiar face of Joe Laing, a property consultant. Joe's been on a few of our SidekickTVs over the years. In fact, it was way back in this room, I think about 6 years ago when you got me on some videos.
I think it was, Rick. Yeah, started it all.
Exactly. Hey, so what we want to talk about today is just really understanding with all of these changes that we're reading about and hearing about in the media with property, what's actually happening on the front line. So with that, Joe, I mean, can you tell us what's going on right now in property? And
absolutely. Where to start, I guess, Rick. So I'm just going to put a little apology out to begin with that I've got quite a few stats written down. So if I am looking down frequently, that's why. So hopefully it's not too distracting. But I guess just as a general overview on the property market and things, obviously the media angle at the moment is house prices are crashing, decreasing, interest rates are rising, there's all these terrible things happening out there. So I guess if we have a look at what they're portraying as the market and then break that down to see what that means in actual terms is kind of usually the best way to do it. So if we look at the average property value nationwide at the moment, it is down 0.9% to 1.087 million. So it has dropped a little bit. I'll talk about that a little bit more in a minute as regarding kind of what that looks like when it's actually relative to some of the increases we've seen in the last couple of years.
I mean, the fact that it starts with a 1 for starters.
Exactly.
It was only a few short years ago, it was 600, wasn't it, the average house?
Yeah, well, we hit that $1 million mark towards the end of last year, I think, wasn't it? And that kind of came around pretty quick. So it's still there and above. So I mean, there's obviously a few issues out there at the moment that are making things a little bit difficult. You have got rising interest rates. We've got obviously cost of living expenses are getting higher and higher. There's the tighter credit regulations and things as well out there, and credit conditions and whatnot for lending purposes, which has obviously had an impact, particularly at the end of last year, beginning of this year, with the CCCFA really impacting things and whatnot. That has somewhat loosened a little bit, but with the interest rates rising, that's kind of the new problem. That is all having an effect. However, people are still buying houses and houses are still selling, so we still have stats to look at and to break down and figure out what it's all looking like. So as a sort of a bit of positive, I guess, Canterbury, where we are, so I might as well talk about it, is the best performing region in the entire country, and that actually had an increase, quarterly growth of 1.9%, which was one of the only places in the country with an increase in the last quarter. The actual average property value is still up 13.8% year on year. So although, yes, we've seen a bit of a decrease in that last quarter, the actual year on year figures are still really positive. It's actually up almost 40% as well on June 2020. So wow, that's a fairly significant rise. The conservative rate of growth, I guess, that most people will tend to look at with property is about 6% on a year-by-year basis. So when we're looking at 13.8% on a year-for-year, that's more than double what we typically would look at. So again, the sort of spin at the moment is pretty negative, but if we can break it down and look at it a bit more detail, it actually isn't looking too catastrophically bad. And
still great news for those that already bought a house.
Yeah, totally. Yeah, so absolutely. And look, if you bought in the last 2 years, then yes, we're going to see some changes with price values and things at the moment, but you've probably had such a significant increase in the last 12 to 18 months that you can take on that change. Many of the areas that will be seeing those declines have had those significant growths. So you're going to be well ahead of where you were 2 years ago. The people that will probably be affected the most, I would imagine, are those that have bought at the peak of the market and their situation's changed. Divorce, death, all the things that happen, and they have to sell. Then they're probably going to be impacted because they will probably struggle to achieve what they bought the property for, and or anything on top of that. So
that's the thought, isn't it? That that the chat that I'm hearing quite a bit is, if you are, say, that young couple that did get leveraged to the hilt at the top of the market, next year could be a bit tough, hey? Higher interest
rates going up. I think I saw a stat that was about 60% of existing mortgages are up for renewal in the next 12 months or so. So that's going to have an impact on people's budgets. It will. It'll make things tricky, and it's going to sort of tighten the purse strings a wee bit. But the other sort of people, I guess, as well, that could be affected are those that have looked to speculatively invest as well. You know, they're looking to just do a quick flip. They've got the property, and that's probably not going to give them a good income as such, or a good return on it, because they'll probably struggle. Which kind of leads on to the thing of most people who are buying property from an investment point of view are doing it for that long term. So again, if you're buying now, unless you absolutely have to sell, you should be fine. You should be able to weather the storm, as long as you've obviously got the serviceability to actually, cover the mortgage and things.
And as well, something in Canterbury, it's the prices have actually stood still for best part of 10 years. Hey, so really, if you were to track the typical growth you'd expect in Canterbury, we're there.
Yeah.
So we haven't really had the astronomical jumps that the rest of the country's had reported. So
yeah, absolutely. And I always look at Christchurch as an area that's still, or Canterbury, that has a real good amount of room for growth still, because of that exact reason, because we haven't quite caught up with everywhere else, and so we still have that wee gap to kind of catch up. So
I'd also heard as well, I listened to a demographer a few years ago, back in 2017, and I don't know if this has changed since then, but they were actually expecting Canterbury to have a population close to 1.2 million people by the year 2040 or 2045. So very interesting stats around that, of something like 150,000 people quite close to Rolleston, Christchurch city itself doubling. So when you start to do that, you're then just working with the simple economic plan of supply and demand. If you've got a decent house in the year 2040, there's going to be a lot more people potentially wanting to live in it or buy it.
Yes,
so,
absolutely. And again, that's back to that long-term plan. I mean, if you've bought a property to live in yourself for the long term, you should be fine to weather the storm temporarily, and the same for an investment. Even if you do, you've bought in the last 12 months and you do drop into negative equity for a wee while, as long as you're in there for a long time and you can service that mortgage, there's no need to panic just yet. It is a case of stay calm and carry on.
So tell me, what are investors doing right now?
Good question. I think there's definitely been a pullback a little bit from an investment side of things. However, we're still seeing some good lending. So in March, there was $1.27 billion worth of lending to investors. That was compared to actually only 811 million in January. So January arguably is a month that is a little bit different to the rest of the months, because obviously leading back off Christmas and things. But yeah, that's still obviously some pretty high lending there to just investors. So there definitely are still people out there. Those investors will always be looking for opportunities, and we're in a market at the moment where I think it's actually a really great time to buy, to get opportunities.
What do you need to get into an investment property now? Like, what are the current rules for people?
Depends on what you're buying. If you're buying an existing, or if you're buying a new build. I deal with just new builds, and one of the reasons that investors favour those, particularly because of some of the changes last year, are the tax deductibility obviously is still there for a new build. Bright line tests only 5 years. So from an attractive sort of reselling point of view, these properties fit in with investors, whereas obviously your existing...
And the deposit can be lower?
Yep, deposit can be lower, So typically 20% on a new build, obviously 10% up front, 10% on settlement. So you've got that, which is pushing a lot of people towards those new builds. I'm seeing quite a bit of demand there, I guess, and I think we'll see that. I think there will be quite a few investors who will be selling up their existing properties and looking to get into the new builds, which I think is a good thing. I think it'll stimulate that side of things, hopefully create a few more properties that are going to be available for tenants, people who can't afford to buy their own houses at the moment. I guess on the back of that, as far as your building consents go, we're still experiencing some pretty record numbers for building consent. So in April it surpassed 50,000, which is pretty huge numbers. It is starting to flatten a little bit, as can be expected after you've had these big numbers come through. You can't sustain that forever. However, the expectation for the building industry is to remain strong in that regards. What we're sort of seeing in some sense is the building activity itself hasn't probably kept pace with some of those consents, and so we're seeing completion dates stretching out quite a bit. So if you are looking at a new build, it's taking that into consideration. It's probably a 12 to 18 month window at least for a new build at the moment. The interesting thing with the building consents for April as well was it was only the second time ever where multi-home consents actually surpassed standalones, which suggests there is a bit of a shift in
higher density
properties and the way Kiwis are looking at buying property and what they're looking at. And I think that probably comes a little bit off the fact we've seen such high increases in property prices that we need access to more affordable property, and multi-unit are typically the cheaper style properties.
It's funny how the Kiwi Dream used to be the quarter acre, and then they wrote that off about 10 years ago. I think the Kiwi Dream now is going to be a garage, isn't it?
Yeah, I think so. Yeah, it's 30 square metre living space. So yeah, but I mean, look, it's happened in lots of other countries, hasn't it? Lots of other developed countries, and we've probably been very lucky for a while with regards to the fact we've had this land that's been available, and now things are a bit harder. It's a case of looking and say, well, what's the next best thing?
Yeah.
And there's some fantastic townhouses and units and developments out there in the cities and areas. So,
oh, sorry, I should say the garage would be connected to a townhouse. It's just, when you look at Christchurch, there are not many garages available with houses in the centre.
No. So that's definitely shifted quite a bit in the last couple of years. Somewhat council led, somewhat development led. In regards to they can probably fit a few more in.
Yeah.
There's a few places that have parking places, or those that actually just don't, which I guess is trying to encourage the cleaner, greener way of living.
Yeah. So what do you foresee then in the what would be your prediction of this kind of investor market, new home space in the coming months or years?
Yeah, I think that most investors will probably be looking at the new build because of what we've already talked about, on top of the other attractions with low maintenance, attractiveness to tenants, usually pretty good capital growth as well, because arguably it's the cheapest time ever to buy that property because it hasn't appreciated yet. So that's one of the reasons that people do look at them, and usually they're in pretty good areas as well, the new builds, as opposed to sort of existing maybe sort of low quality areas. So I think there'll still be demand for it. I think the next year or two will be very interesting to see how much demand there's going to be while people kind of just get a feel for what's going on. There is a bit of a shift at the moment, as I mentioned, with those interest rates, but what that's actually meaning is people are trying to get something pretty quick because they want to lock in the interest rates before they go up even further. So that is kind of pushing things along a wee bit still.
And do you think that will push, what effect do you think all of these things are going to have in terms of, non-deductibility of interest becoming a much bigger number, interest being a big number anyway, because houses have gone up 50% in the last few years, right? So what are we thinking that's going to mean in terms of rent, the yield for properties? Are we going to...
we're already seeing an increase in rents, and that is predicted to continue. So that will ease the costs of obviously servicing the properties a wee bit at the moment, because obviously they're getting quite high. But we're sort of seeing around about 3.5% on average the yield in Christchurch for a property. Most investors are probably looking at it for the long-term capital gains rather than the short-term. But if you can get a property that has a good return, then obviously it's going to make life a lot easier. So I do see those rents going up. I don't know if it'll be $100 a week sort of increases, but I think we'll see some increases.
It's the challenge, isn't it? I mean, I have this debate quite a bit with people when they say, we should be taxing this, we should be taxing that. It's like, well, tax is never going to make anything cheaper.
No.
When you import foreign goods with high tariffs on them, they're really expensive.
Yeah.
So don't think that tax is the solution to make things cheap.
Yeah, and then you've got all of those, but sort of situations, but you've also got your build cost increases at the moment as well. So we've seen an average, the average price for a 3-bedroom is increased by 21% in the last year. So those costs get passed on as well, and
land here has doubled.
Land's doubled. So these costs all do get passed on and eventually trickle down into that sort of rental market, I guess, in some sense. So
whoever lives in the house is ultimately paying for it. Yeah,
exactly. So I mean, with regards to the build increases, we've obviously seen some sharp increases there. Chances are we're probably going to see some further increases. So I guess when you're looking to buy, if you're buying a new build, it's obviously taking in consideration that, checking over your sales and purchase agreement if you are buying a new build, because lots of developers will put in a price provision into the contracts. So it's just making sure the wording around that is beneficial to you and not massively towards the developer. Lots will have a cap of say 5% of the purchase price if they absolutely cannot get the build supplies that are in the original plans. There's the odd one that sneaks through there that's potentially not worded as well. So just keep an eye out for those sorts of things.
Great. So get that stuff checked over. Hey, make sure that you, as the buyer of this thing, that you are absolutely clear on what you.
100%. Yeah. Get your lawyer to check over it with a fine-tooth comb, because a new build contract is completely different to an existing property contract. So making sure you're using a lawyer who actually has got experience in that as well is really important.
Perfect. What would be your advice there if someone's thinking about, okay, I've had rentals or want a rental, or they might be brand new. What would you be saying to someone now who's wanting to get into the market? Because I think a lot of people are feeling a bit more pessimistic about it now, certainly than they would have over any other period in the last 10 years.
Totally.
What would you say to someone considering it still?
Like I mentioned earlier, I think it's a great time to buy. If you've got the ability to do so, if you've got the equity and you've got the ability to service a mortgage, then it's an absolutely fantastic time to buy, in my personal opinion, because you've got options available. We've actually got really good stock out there at the moment. There's been a huge increase in stock levels, so you've got those choices. You can look and you can find something. You can probably take a little bit of time, bearing in mind obviously the rise in interest rates, but you can take a little bit of time to find something that works for you in an area that you know or you're comfortable with. Because there's been an increase in stock, usually that means there's a little bit more wiggle room. So with developers, they're in the business of selling. It's not just an individual property that they're selling, if it was just a sort of member of the public. So developers usually have got a little bit of wiggle room to continue those sales and keep that happening. So you probably can find the odd deal out there. You might be able to get a slight reduction in the purchase price, etc. Buying in a counter-cyclical market is really challenging psychologically, I think. It's a hard thing to get your head around because it just feels so wrong, but it is what creates opportunity. So if as I mentioned, you're in a position where you can do it, it's probably quite a good time to get out there and have a look at something.
Great.
Do your homework on it, see what you want to buy, and see where you want to lock it in. As far as just some further stats go as well, if you want to have a look at that, so you can see why I guess long-term property investment is worthwhile. Again, we've obviously mentioned there that the media currently are putting a wee bit of a spin on the property prices decreasing and things, which that they are. There's the stats there to show that in the last quarter. But again, looking at that in a bit more detail, if we look at the year-on-year changes for some, the four sort of main metro areas, so we go Auckland, that's actually had a 12.2% increase year-on-year. 2 year has been 36.4%. Canterbury, 24.1% year-on-year, 47.5% for the 2 year. Wellington's 9.7% and 42.6%, and then Waikato 17.1% and 45.2%. So you can see there,
and the Waikato has actually been having that kind of growth for the 10 years prior as well, right?
Yeah, and it's so one of the main areas that we focus on, or I focus on, is your Canterbury, your Waikato, Wellington, Auckland, main metro areas. Again, when we're in a market such as this, it's probably even more beneficial because they've got the economies to kind of cope with any downturns. And I always hear people go, "It can't carry on like that," and my response is usually, "How much did your grandparents buy the first house for?" Yeah, and you look right back to the 70s and you look at stats, and you've got the odd blip here and there, but typically it correct itself, and then you have a growth like this over a 2 year period and drops off. So I mean, as an example, just to give you some figures on an example property purchase, so like if you were to have bought a property in Christchurch as an investment property in 2020 for $500,000, which you probably could have done back then, with the 2 year change that Christchurch or Canterbury has experienced I think it was Christchurch I was looking at specifically, of 49.3% in 2 years, that property would be now worth $746,500. If that property then or now suffers, say, 10% decline in its value, which is what people are suggesting is going to happen, then that property is still valued at 671,850, which is still an increase of 34.37% over a 2-year period.
It's still $170,000 in 2 years. So $1,500 a week.
Yep. So you can see that if you go to the extreme end of what the prediction is in some areas of 20%, that's still a 19.5% increase over a 2-year period. And again, 6% being the sort of standard figure people use to predict what properties might increase by. So 12% over 2 years, that's still 7.5% better, even if the value dropped to 20% than what most people predict property prices increase at. So,
and the last time something like this happened, I remember hearing an economist saying that, in 2003 they were saying it's going to crash, it's going to crash, it's going to crash. And if you'd listened to them in 2003 and you didn't buy houses, you wouldn't have had your properties double in value between 2003 and 2007-8, and then it crashed when they lost between 5 and 10% of that value of the fact that they doubled. So it's
there was a lot of people in the last sort of 12 months or so going, I wish I'd bought 2-3 years ago, I had the chance, I didn't do anything, and now I need to buy because the growth's happened and I don't want to miss out on any further growth, and now things are going back. No, was it a good time to buy? So anyone that's out there looking at the moment, you kind of go, well, do you want to buy today and experience that next round of growth that might come in 5-6 years or whenever it is, or do you want to wait for that next cycle of growth and then buy it when it's at that peak again? There's never a cheaper time to buy a property than today, in some sense.
Sometimes tomorrow.
Sometimes tomorrow. So it's just a case of, look, with property, with investment, there's always risk, there's always gamble, and to be done, and as long as you know about those risks and you're prepared to kind of go with it, then
it can work.
Suggest you do it, and it works, and these numbers show that, and it's one of the best ways to grow wealth as well. Somewhat short term, if you're looking at it as a sort of 10-year, you can make some fantastic returns.
No, thank you. Hey, thanks so much for that, Joe. That's great. There's a lot of knowledge that we've packed into this. Given the subject matter, I do just want to stress there was absolutely no financial advice in this video aimed at you. Okay, no. So don't go and buy a house because we thought it could be a good idea. We didn't think it was a good idea for you specifically, okay? So chat to a financial advisor. The key thing with property that I will always stress is go and get good advice before you do anything, right? Because when you sign those documents for a 30-year mortgage, you're in, you're on the hook, you are committed. So take the time, generally spend a bit of money, and go and get good advice before you dive into it, okay? Because the other thing is, it's not for everyone. And I have seen some people lose money with property, right? So definitely make sure you get solid advice before you dive into it. And look, we're always available if you want to talk about property, because we do like it. So, cool. Thanks, Joe.
No worries. Thanks, Rick. Cheers.